It really is somewhat guarded. The trends continue to be favorable. Momentum is holding up well. Breadth is actually holding up well. We're seeing a lot of churn. You've obviously addressed the softness that we've seen in energy shares today. But there really is an anxiousness to get some color around policy, whether that is monetary policy or fiscal policy. So looking at things like the ECB meeting, like the Brits going to the polls, and former Director Comey's testimony, all will spark interest on the part of domestic investors.
Eric, you talk about that anxiousness in the market. We often look to the bond markets to kind of measure how high that anxious level is. And you look at where the bond markets have been. The 30-year yield fell to its lowest level since the U.S. election in November. Yesterday, the 10-year yield did edge up higher, but we also saw it fall to a 7-month low. What does that tell you about where investor sentiment is?
It does point to some of the risk-off nature that investors are really taking. We're in a period where one of the catalysts for the markets to move higher in the first quarter was earnings. We saw rather robust earnings coming out of S&P 500 companies. We won't see second quarter earnings reported until mid-July. So we're in this purgatory where we're forced to deal with just policy-related issues. Seeing the retracement of the 10-year particularly is highly interesting, and you could almost argue that it's an unwinding, if you will, of part of the Trump trade. Part of the reaction on the part of investors after the election was to send yields sharply higher. We're seeing that type of retracement, and investors are generally positioned more favorably towards the 10-year, reflecting that concern. We also have seasonality kind of weighing against shares right now, so that's helping to create a further bid for more conservative or risk-off vehicles.